In the early 2000s, Enron was the seventh largest company in America. They weren't just big, they were untouchable. A company that, if you looked closely, didn't really sell anything. And somehow, Wall Street politicians and ordinary Americans all bought it. Except it was all a lie. A massive, sprawling scam filled with lies, fraud, and political manipulation. Billions were stolen. Thousands lost their jobs. Executives walked away with fortunes. One trader killed himself. And the whole world got a front row seat to corporate greed. This is the story of why everyone believed a company that sold nothing. Enron didn't start as a scam, and it began as a normal energy company, mainly selling natural gas. But soon it got ambitious. Instead of just selling gas, it started trading energy, power, and eventually even broadband. On paper, it looked like they were creating new markets, but most of it wasn't real. They were selling contracts for things they didn't actually have yet. Then it got wild. They even started selling the weather. Sunshine, rain, whatever. You might be wondering, what? How? Well, Enron created weather derivatives, which are contracts tied to the weather. For example, a company that sells ice cream might worry about a rainy summer hurting sales. Enron would sell a contract that pays out if it rains too much or too little. Essentially, Enron was making money by selling promises, projections, and bets, not actual products. Investors loved it, analysts loved it, politicians loved it. Enron's stock kept rising year after year, and the company became Wall Street's favorite. It looked like magic, a small energy company turning into a massive trading empire. And politically, Enron was untouchable. They were the biggest contributor to George W. Bush's campaign. Bush even called the founder, Kenneth, Kenny Boy. Connections like that made it look like Enron could do no wrong. But behind all the hype, the reality was much less impressive. The company wasn't selling real value, it was selling illusions and numbers on a spreadsheet, and everyone believed it. Enron's first warning signs popped up in the late 80s with the Valhalla scandal. Two oil traders were gambling huge amounts of the company's money, moving it into fake accounts with names like My Ass. Auditors saw it and warned Kenneth, the founder. Most people would have fired the traders immediately. He didn't care, as long as they were making money. In fact, he even sent them a note telling them to keep making us millions. This set the tone. Enron didn't just tolerate risk, they rewarded it. When Jeffrey Skilling became CEO, he took this to the next level. Skilling introduced mark-to-market accounting, a way to write future profits into today's books. A deal worth $50 million over 10 years, boom, $50 million counted immediately, even if not a single cent had been received. Deals became whatever Enron said they were worth. Reality didn't matter. They also hid billions in losses and complicated off-the-books partnerships. So while it seemed like they were selling all these things, much of it was just numbers on a spreadsheet. Skilling also turned the office into a survival of the fittest arena. Employees were ranked constantly, and the bottom 10% got fired. People worked 18-hour days, ruthless for bonuses, while Enron's actual profits often didn't exist, and somehow no one seemed to question it. Investors, analysts, even the press were mesmerized. Enron had created the illusion of success, and everyone bought it. By the late 90s, Enron was less an energy company and more a story everyone wanted to buy into. Their secret, illusion, and charisma. Skilling and Lay made everything sound revolutionary. We're creating transparency, they said. We're changing the way commodities are traded. They held flashy conventions, convinced employees to pour their 401ks into Enron stock, and dazzled investors with slides showing billions in profits. Even when projects in India were failing, power plants were worthless, and deals were collapsing. The press, mesmerized by the complexity, mostly shrugged. Analysts either didn't understand the deals or were scared to push back. And when someone did, like Fortune reporter Bethany McLean, executives worked overtime to confuse and intimidate. The company had become a perfect illusion, massive on paper, almost nothing in reality, and yet the stock kept climbing. People didn't just buy stock, they bought a story, a dream, a vision of infinite profits. Enron wasn't selling gas or electricity anymore. They were selling belief itself. All good illusions eventually crack, and Enron's was spectacular. By 2001, cracks were everywhere. Deals that looked like billions in profit on paper were actually losses in reality. Skilling had left his role months earlier, leaving Lay in charge, but the rot was already deep. Sharon Watkins, an Enron employee, sent a letter to Lay exposing the fraud and corruption, and investigations began. Analysts started asking questions. Suddenly, the golden image of Enron as the company that could never lose started to fall apart. Stockholders panicked, employees lost jobs and retirement savings, executives sold their stock while the public watched values tank. Within a month, a $60 billion company collapsed completely. Auditing firm Arthur Andersen shredded tons of evidence trying to cover up what was happening, but it was too late. Enron went from Wall Street darling to corporate cautionary tale almost overnight. Thousands lost jobs, billions were wiped out, and reputations were destroyed. Lay died before sentencing. Skilling served 12 years of a 24-year sentence and walked out in 2019. Many of the other players either paid fines or faded into private life. Enron left a mark that still echoes today. Tens of thousands of employees lost jobs and retirement savings. Billions of dollars evaporated from investors. Auditing giant Arthur Andersen collapsed. And yet, the most shocking part? People kept believing in the next big thing, as if nothing had happened. The story of Enron isn't just about one company. It's about how charisma, complexity, and clever accounting can convince people to believe in a fantasy. It's about how a company can look like it's selling energy, bandwidth, or even weather, but what it's really selling is trust. And the lesson: complexity can hide fraud, authority can blind judgment, and hype can outweigh reality. Even decades later, Enron serves as a warning. Just because everyone believes something is valuable doesn't mean it actually is. And maybe that's the scariest part, that people will keep falling for companies selling almost nothing.